Welcome. It's Carol S.L. Mark from eXp Realty, and today we have the pleasure of Dashna Joya from True North Mortgage. Welcome.
Thank you so much. I appreciate you inviting me here.
Well, I actually found your company very intriguing, and I'll tell you why. Because right on the home page, and especially in these days where you're hearing interest rate hikes all the time, it says, get a break from higher bank rates. So I thought, wow, isn't that nice? And then also, it's time for a cash happy mortgage. So, Dashna, can you tell me what you do for the company and what your role is? And maybe we can get right to the point of how you can offer us happiness.
Absolutely. I'm a more mobile mortgage specialist with True North Mortgage. I have been with the company for about going on 9 years. I've had several roles in the company. This is the one I'm doing now. But yeah, so a mobile agent who essentially works from home, and majority of my mobileness is through virtual conversations with clients. We don't really have a lot of actual meetings where I have to drive out and meet a customer, but my role is mobile. So I guess in a way, virtual mobile role where I can speak to you anywhere you are as long as we have access to a camera and a phone.
Well, one of the interesting things that intrigued me about True North Mortgage was the fact that they come out right at you on their homepage saying that they're going to make me happy. And right now, with the inflation and the cost of food and the cost of mortgages, that's a good hook. It
Well,
is.
it is true. I mean, we do have a product in the market that is designed to help with the stress test, which is the 6 month term product that we offer at a much lower rate than what the market rates are. So this stress test or stress relief product that's available in the market, it has a few conditions that are important to note for the client. And we are very transparent about that, which is there is a discharge fee of 1% on this product. So when the 6 month term is complete, if the client wants to pay out the mortgage or switch to a different lender, there's typically a 1% discharge fee. And usually at renewal, the client may be subject to a slightly higher rate than what the regular rates are. And the reason for this is I know this rate is advertised as a stress relief rate. However, it's more designed for clients who are trying to get qualified for a particular mortgage amount, which they cannot get through the conventional rates that are available. So, with this stress test relief or stress relief rate that we have available, it allows us to qualify clients at a lower stress test rate to get them the mortgage amount they require, because it helps us to bypass the whole stress test qualification process. So just for your information, usually when we qualify a customer for a mortgage, the stress test we use to assess your affordability is your contract rate, which is your mortgage interest rate, plus 2%. So when you're looking at the conventional advertised rates for 5 year fixed term at, for example, 5.29, 5.49, then you have to add an additional 2% to this interest rate to qualify for that mortgage. Whereas with the 3.99, so in that example, you're looking at qualifying at 7.29%, whereas at a rate of 3.99 would get qualified at a rate of 5.99%. So it makes a difference. And with this tight housing market and inability to qualify for the amounts that we're looking for, while we're still trying to navigate this strange real estate market where prices are still quite high, and affordability is becoming reduced, this is one way to help some clients get into a property.
It's actually very innovative. And I know because I know that there's been bidding wars in the last few months, and I've been in them. And the amounts over asking are quite significant. And, when you're set at a certain price and it goes over 300,000 or four over asking, they're not going to be in that ballpark playing.
Absolutely. I mean, I don't know how you're finding the market since the last rate announcement. I've noticed that it's softened up a bit
Yes.
compared to what it was like just prior to that announcement. But like I know from the perspective of actual properties, you're seeing what's going on in the field. But for us, we saw interest rates in the range of 4.59 just before that announcement. And as soon as there was indication that inflation had ticked up and GDP for the country had come in higher than expected, automatically we saw fixed rates within a matter of weeks go up by almost 1%. So we were offering 3-year fixed rates around 4.59, 4.69, and then it jumped to 5.49. And then as of last week, we're looking at high fives, low 6% interest rates for the same terms that were available at mid fours. So the change is quite drastic. And I'm sure you're feeling it on the real estate side because it does affect what your clients can afford to buy.
It's also very interesting because notice that there's not that many people, bidding. I'm getting agents calling back. Oh, is your clients interested? So I think people are being a little bit more cautious because I think we're due for more rates this summer.
Yes, absolutely.
So I think that it's great. What's so special about True North? I know the CEO Dan Eisner started it in 2003, and his premise was that Canadians with good credit scores should deserve better rates. And I love that. And when I saw him being interviewed, he said no fees, which means no extra fees. And I thought, here's a guy I could trust. A lot of people in the banking business, you're not sure how trustworthy. He puts his money on the line for his
Yes.
clients.
Dan is definitely an innovator. He is someone who definitely always is thinking outside the box to improve business. But when you are good at what you do, it's because you're providing your customers with something that benefits them. So yes, I've been with the company since 2013, and I've learned a lot from Dan Eisner. He's very customer focused and putting the client's needs first, which always pays out for business when you're meeting your clients' needs. So with Dan, the idea was when he initially started was to create an experience for the client where they're getting the best of both bank world environment where the client can go into a branch location, sit down and talk to a representative, and at the same time have access to a variety of lending options and not be limited to the one product where you go to each individual bank and only have access to the mortgage products that they provide. And in addition to that, previously mortgage brokers were seen as professionals who dabble with certain particular niche products. So if you can't get approved by the bank, then come to us after. So Dan was trying to debunk that myth that you can come to us even and we will try to beat your bank's offer as well. So with that thought, Dan was one of the first brokers in the industry who started the idea of buying down interest rates. So in the past, a broker would charge a fee for the service that they would provide, and they didn't typically buy down interest rates when whatever the lender offered is what the customer got. But we have the ability to buy down interest rates from the commissions that we earn. So we typically buy down our clients' interest rate, and in addition to that, we do not charge any fees to the clients that we service. Now, just to be specific, we do service clients that deal with A-side lenders. So this is your conventional bank, mortgage companies, credit unions. But some clients always need help from alternative lending as well, such as B-side lending, which is good for clients that may have had credit history issues, maybe self-employed and not declaring enough income through conventional notice of assessment T1 general sources, and need, some other options where we can look at the business income itself. In those cases, the lenders do charge fees, but those are typically not the bulk of the business that we do. Majority of the business that we do is focus on A-side lending, and in that case scenario, we do not charge fees for the service that we provide.
Well, I'm very happy that you're creative because not everybody fits into a box. And there's a
Absolutely.
lot of people that have side hustles that are self-employed, and where do they go? So gives them an option in the
And in this market, that's becoming more and more prevalent because we're seeing a lot of clients that are not able to get qualified with these high stress test rates that we're using to qualify clients. And in addition to that, Banking, well, with the financial sector now coming under pressure to make sure that they're being careful with the credit that they're giving out. The banks are coming under fire or under some hot water from regulators about the longer amortizations. I'm not sure if you've heard of the variable rate
Yes.
mortgages creating 80-year amortizations. So with all those things now coming to the forefront because of what's been going on in the last couple of years with cheap credit that we've had access to, now there's going to be more pressure for banks to be more responsible with credit lending, and be a little bit more strict when it comes to making exceptions. So that always tends to leave people out of getting qualified when you're looking at a very small, tiny box to fit, when there's a variety of different sources of ways that people make an income in this country. And so it is definitely always helpful. I've worked for the bank prior to this, and comparing being employed by the bank and how the bank qualifies their clients versus being a broker and having options and never having to really say no to the client. We're always going to be able to find an option. It's just a matter of, are you willing to pay that cost? And a lot of times people are willing to pay the cost because they need access to financing.
Yeah, and I think it makes it like accessible, especially when you hear that, we're inviting Canadians, in the last little while to come to Canada as new immigrants. They may have had professional jobs in other countries, and now all of a sudden, guess what? They can't get a place to live. They can't get credit. They can't get a mortgage, and it's very challenging. And I think, to be fair, I think to have those options, um, throws a little bit more creativity. I've used a mortgage broker myself, and I've used the banks. And it's funny, and going back, I did have a mortgage broker says, "Why would you use us? You're an A client." But it was because I think the service was much better.
Hmm.
And I really loved the fact that they took their time, they explained their products, they offered me different options. But with the bank, it was like, da 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 da. That's it. There's no other options.
Right.
And I think that, in today's marketplace, when people can go on the internet, search things, and go, wow, isn't that a great product? And that's how I found you guys, actually.
Amazing.
Yeah, I loved it. I researched it, and I thought, I want to really engage with this company because I would probably have clients that would need this, and this is a service or a one of the solutions that I can say, well, you can contact ABC, and then at least I would have a list, and you guys would be on the list. Now, one of the other interesting things was that he mentioned that you guys are on salary. There's no commission. So is that correct? And
That
then why
is
is that different?
That is correct. So most other brokerages are only commission based. Um, so it doesn't really provide you with that consistency so you can focus on providing the client with proper advice. The idea is not having to worry about just solely your commission. I mean, in my personal opinion, I think that if you're good at what you do, whether you're commission based or salary based, you're always going to provide good service and you're going to get clients in that way. I'm sure as a realtor, you can understand that. So, I mean, we are pretty much all salary based. And at this point, because I've been a mortgage broker for so long, I'm at a smaller salary base and a higher commission structure. But there are positions where if you need more assistance, for example, teammates in a branch where you can discuss deals or discuss different lenders, then in that case scenario, you have a higher base salary position with a smaller bonus structure. So it really depends where you fall in that spectrum. But yes, we are all salaried base agents with a bonus slash commission component to our income.
Yeah, so that actually was a surprise to me because I thought everybody was commissioned. So it actually makes you feel that people are not chasing. You're not chasing people just to close the deal. That you really care about them as a person and as getting them the product they want as well.
Well, I mean, at the end of the day, we still want to close deals.
I know, but
we've
it's
got to we've got to meet the bottom line. But I think what it did for me, when I was in a branch and I was in that salary structure, is that it helps you become a stronger team. because majority of the way that we're paid out is based on team performance.
Yes, I like that.
So when you are performing as a team, it's nice that, if you have a slow month and your colleague is doing great, then you kind of back each other up. But at the same time, it creates a source of accountability, and it creates a team environment where you're kind of vested in each other's development. So, if my colleague whose performance I rely on is not knowledgeable on something that I'm knowledgeable on, then I'm more willing to share my knowledge and help to speed them up to where I'm at. Or if there's a strategy that's working for my colleague in attaining business, or uh, getting their clients to be more satisfied with the service, then I may copy their methods, and they would be more than happy to share that method with me, because we benefit from one another's performance.
Yeah, I love
Uh,
that. Best
so
practices.
so in that regard, I think that having a salary base with a team bonus structure is definitely helpful, especially when you're starting out. But there are seasoned agents in our company who are more on the commission based side with a smaller base structure, just because at this point now they've developed their skills where they don't need to rely on the teammates so much.
Yeah, but it's nice to have that backup support.
Oh, absolutely.
Now, I know that Dan had the opportunity to be on Dragon's Den. That must have been quite interesting. And that
Yes.
was way back in the beginning of the company. And he decided basically not to take the deal. He decided he didn't want to give up his portion of that equity. And I think it takes a lot of guts to do that, because you don't want to sell out. You have a dream, you have a vision. And if he did, maybe the company would have gone in a different direction.
That's exactly it. That's exactly it. I think Dan was very passionate about his plans for the company. And he didn't want to give up the control on that piece. And he's done pretty fantastic. In the industry, he was one of the first ones to create his own lending company that was approved by CMHC. That definitely gave us an advantage, because having our own lender, was we were able to cut out the middle person and offer a lot more competitive rates to some of the clients that were able to qualify with our lender. So that gave us that advantage as well. But in addition to that, over the years, we've been able to offer a variety of different product types. So we've had the ability to actually service different type of mortgage needs, within our client base, compared to what a conventional mortgage brokerage does. So just to give you an idea, typically when you sign up with a brokerage, like one of the super brokerages, I don't want to throw any names out there, but I'm sure you know which lenders or brokerages I'm talking about. You're basically pretty much on your own. They do provide support, but you're essentially on your own, and you build from there. With TNM, we're very team based. We have a Slack chat where we're discussing our applications, discussing different lenders as a company wide. And you can imagine we're not such a small company anymore, with a few hundred employees actually. So in that case, there's a lot more support and a sense of togetherness, versus just feeling like you're on your own and without any guidance.
No, I think there's very strong like team support. Now, one of the other things I wanted to ask, what are trigger rates? And I noticed maybe you could discuss that.
Yes,
And what are
trigger
the
rates.
options?
Trigger rates have become a popular piece of information now that we're exploring further. They've always been part of a conversation, but the reality is customers have not had to hit a trigger rate. For majority of the years that I've been a mortgage broker, I've only had to explain what it means and just leave it at that, because we've never actually had to hit these trigger rates in the past. So a trigger interest rate is offered by variable rate mortgages, where the payment stays the same
Mhm.
when the rate fluctuates. So if rates are going upwards, just more of your payment goes towards interest versus principal. And the opposite is true when interest rates are going down, more goes towards principal versus interest, but your payment is actually locked at the original amount that you got when you first got your mortgage. Now, a trigger interest rate is a point in your payment where if interest rates go up to a particular percentage, now your payment is not enough to cover the interest portion of the mortgage payment. At this point, you have to make some changes, either increasing your mortgage payment, um, or converting to a fixed interest rate, or making a lump sum payment to your mortgage. These are all options that you can exercise, but you do have to do something about it, which is kind of what has led to this much longer amortization periods than
Yes.
what would be typically allowed. But a trigger rate is essentially you not making enough payment to cover the cost of interest for your mortgage. And at that point, that's when you have to make a change to your monthly payment, essentially.
Now, are you seeing more of this now?
Yes, we saw a ton of those, especially for clients who got their mortgages in 2021 and 2022. Variable interest rates were very popular. The reason for those was, I don't want to say misguidance, but Bank of Canada indicating that interest rates will stay lower for longer. So a lot of clients were intrigued, and took on variable interest rates, especially knowing that there's a trigger rate which will protect them from their monthly payments increasing a certain amount. Just because historically speaking, majority of mortgage professionals have not actually been in an environment where we've seen interest rates this high. So it's hard to kind of give advice on something that you've not experienced personally. So our idea was that maybe Bank of Canada will start raising interest rates at the end of 2022, and hopefully it'll be a gradual rate increase, just to make sure that, typically Bank of Canada raises rates by 1/4% at a time, and that was our understanding, that if it does start to increase,
Yes.
it'll be a 1/4% at a time, and the client will have enough time to kind of make an assessment on what they want to do, convert to a fixed rate or not. But we kind of got blindsided when we saw those interest rates going up by 1/4%, or sorry, 0.5 to 0.75% at a time, which was unseen, unheard of, and it was happening nearly every 6 weeks, which is, every announcement by Bank of Canada for all of 2022. So yes, a lot of Canadians who had variable interest rates had to come to the realization that their payments were no longer enough to cover their cost of borrowing, or cost of their monthly mortgage payments. And it's been tough because we've had to have a lot of conversations. These are real life situations where, it's really eating away at your grocery bill. It's eating away at you being able to service other things that you want to do with your money, and now you have to spend that on paying a higher mortgage cost. So yes, go ahead.
It's a challenge. I was going to say, what advice do you give to people at that
Um,
point?
I mean, at this point, we've been trying to gauge to see where things are going, but I've changed my strategy to say you should do what makes sense for you right now. I don't think it's makes sense at this point to try and figure out where things are going, because we've been trying to do that in the last couple of years, and I don't even think Bank of Canada knows where things are going. So I don't,
No.
I, I don't want to give myself that credit that I would know, because they don't know. So I look at my client's situation, and if you're living, I mean, I know a lot of people are not living large right now where they're getting a massive amount of income. Life is expensive. So if I see my clients who are in a fixed income, they're not having a lot of wiggle room, I say go fixed. And a lot of clients are going fixed right now because I think there's a fear that the variable rate is something that is not that is very unpredictable, and there's really no incentive to take a variable rate right now because it's higher than fixed rates anyway. And there's also the risk component that it could go up anytime soon. So that's that. But for the clients that are already in existing variable rates, some of them are choosing to stay because they believe rates will come down. Others have decided to take shorter term fixed rates because they just want that peace of mind. So I really think it depends on the client's risk tolerance and what they're comfortable with, what their income and lifestyle is like, when it comes to that decision.
Now, one of the other questions I wanted to ask you is, what advice do you give to the first-time home buyer?
Advice for first time home buyers. Well, there's not a lot of them left right now.
Well, there's still a few. I just wanted to wrap it up with that question because,
Yes.
they may have gotten money from the family, they may
Yes.
have saved up a bit of money, maybe they're not looking in areas where the prices are very high. I wouldn't say in Toronto or Vancouver,
Yes.
but maybe outside of the city, um, you know.
Well, for first time home buyers, what I tell them is just remember that, if you're living at home right now with your parents or you're renting, owning is completely different because you're going to have a whole lot of set of bills to pay now that you didn't in the past, like property taxes, water bill, maybe home insurance. These are things that a renter does not pay, especially if you're living at home and you're not paying any of these bills at all. So it's important to budget and know that when you're looking at your monthly mortgage payment, also add in those other costs. Don't just look at your monthly mortgage payment or find out from the mortgage professional what you can afford for the mortgage amount, because we don't look at those things, which are, your actual bills like your home insurance, car insurance, your utilities bills and whatnot. Do a proper financial plan for yourself to understand what your expenses are going to be month to month, and not just find out what the maximum amount is that you can afford to borrow, because that could leave you in a position that might be tough to carry on with where interest rates are.
Do you think the dream of having a home in Canada is gone?
To
If
be
you're
on
first,
to be honest, I have a lot of conversation with people who are looking to leave the province or who are looking to invest outside of the province because just home ownership has become so difficult in Ontario. From an affordability standpoint, if you're an investor and you want to buy a rental property, oftentimes I'm finding the rental properties are not cash flowing properly. They may have to cover monthly expenses out of pocket because no matter how high you can charge a rent, there's only so much rent that you can get. But with interest rates being where they are, it's not really covering all the costs of the property. And if you're looking as a first time home buyer, I mean, wages have not gone up so much as interest rates have, and prices have not come down enough where it makes sense at these interest rates to qualify. So unfortunately, I don't know if there's a lot of choice left for first time home buyers. Either you can afford it or you can't. And that's kind of the two categories where they don't really have a choice. So rents being where they are, they're quite expensive. If you can afford to own, great, but just make sure that you have a little bit of money as backup to cover your expenses while you get used to becoming a homeowner.
good advice. So at that point, I want to thank you very much,
Oh, my
and
pleasure.
it's been a pleasure. And also, you can reach you. What's your phone number, or they can reach you by email,
Yeah,
Dashna?
absolutely. My phone number is 416-595-0128. And my email is dashna.joya@truenorthmortgage.ca. So if anyone has any questions or want to have a chat about mortgage options, feel free to reach out.
It's great that you're able to do that and to chat to a real person. And I thank you very much for taking the time. This is Carol S.L. Mark from eXp Realty. And thank you, Dashna Joya from True North Mortgage.
Thank you, Carol, for having me.